When you invest in crypto, you want the right tools in one place to help you achieve your goals. That's why I recommend Gemini. It's an exchange that's secure, trusted, and has all the tools you need to buy crypto and grow your portfolio. Timing the market can be stressful, but staying consistent doesn't have to be. With Gemini recurring buys, you can automate your crypto investing, helping your portfolio smooth out markets' ups and downs and stay on track towards your goals. In addition, Gemini's Active Trader gives you professional-grade tools like custom views, charts, and alerts, so you can trade and manage your portfolio all in one place. They've been around for 10 years and their commitment to keeping users safe give confidence when investing. Terms apply. Signing up is free. Start investing today at gemini.com/Real Vision.
Welcome back to Trading the Markets. I know I promised everybody last week that Bijan would be back, but the guy is closing in on a house. So, congrats to Bijan. I believe it's his first house to own, and far more important than looking at crypto prices at this time of year, though. Kris, you told me before we got started, you have a real doozy of a show for us today, it seems.
Yeah, I want to spend some time looking at some charts that support, why the cycle is likely not over and the top is not in. And I think I've got some interesting information here that is new and not stuff that I've been talking about, and will shed some interesting light. So yeah, I'm excited to dig into it.
Awesome. I got a bit of a sneak peek, so I can say the hype is worth it. So Kris, why don't we start in on the first chart?
Yeah, so there's a lot of information here, and so bear with me for a minute. It's going to take a minute to get through this, but I think once we do, you'll see what I'm saying. So what we're looking at here, we've got the Bitcoin chart kind of hiding in the background here. This is the Bitcoin chart on the weekly time frame with a 100-week moving average, this red line sort of hiding below it. And then overlaid over the top of it, we've got this indicator called the plus directional movement indicator. And that's made up of like this line chart here and these green and red horizontal bars. And what this is telling us, like, think of this indicator as basically a gauge for buyer ambition, you could say. Like, it ignores the noise and focuses strictly on whether buyers are successfully pushing the weekly highs up. And basically it works by comparing this week's high to last week's high. And if we're not making higher highs, then the value drops, then the line drops, essentially. And so when we're at all-time highs or super high values, sort of euphoric trend chasing type values, it'll cross over this threshold here, and we'll see a red sort of overbought, over euphoric indication pop up. And then conversely, when we're at the bottom, when the market has basically stopped trying to go up entirely, we'll see these ultimate lows here. And if you look kind of overlaid on the Bitcoin chart, you can see that these lows happen historically sort of at or near larger bear trend lows. Now, granted, in 2022, it didn't quite happen at the ultimate low. We still had a little bit more price action. And then, of course, we had this FTX flush out here that nuked it a little bit further. But it came off the back of like the Three Arrows Capital collapse and the Luna collapse and all of that. That's when it triggered. And then here back in 2020 or 2019 rather, it basically triggered at the market lows. And then going back to 2015, it triggered initially, but then ultimately triggered again kind of at the market lows. And if you look at this, you'll see that it took quite a while for the market to become fully exhausted, for sellers to ultimately become so exhausted that they pushed this threshold all the way down into this lower range. Like last cycle, it took 31 weeks or 217 days. So, 2/3 of a year, basically, it took from the peak for this to ultimately signal. Going back to 2019, it took almost a whole year. It took 350 days before finally sellers were so exhausted that it triggered this signal. And then again, going back to 2014, 2015, it first signaled 315 days after the peak that happened. Now, if you go and look at here, where we are right now, it triggered basically 21 days. Peaked. So we hadn't even really entered the bear market yet. We hadn't even broke down below the major moving averages yet. And already this line had gone below this threshold. And not only that, it has continued down to the lowest level that it has ever recorded in Bitcoin's history. And we're still just a month off of the all-time highs. So this is basically telling us that this is signaling the most exhausted sellers ever measured in Bitcoin's history a month after we peaked from all-time highs, let alone, at the end of a bear market, let alone at the end of major structural breakdowns and anything like that. So like, okay, what can we glean from that? I've been staring at this chart for a while, for like an hour, basically, looking at all kinds of insights. And so again, this is telling me that the market has experienced a massive, it's like a super accelerated bear market, right? And then to kind of support that, if we look real quick over here, we can see like the weekly RSI is also at or near bear market levels. Now, granted, yes, at the bottom in 2022, it does sort of poke down below the oversold, sort of the 30 level threshold, and the same thing back in 2019. But you can see it's still hovering right now in this sort of range where it clusters at a bottoming level. And then the same thing here. Like, yeah, it hasn't had the ultimate poke below, but it's still sort of at bear market low type levels, basically, on the weekly RSI. And again, we're only a little over a month off of the all-time highs. Even when we were peaking, at all-time highs, we were already trending well down on the weekly RSI. And so again, this is telling us that like we've sort of gone through an accelerated bear market phase in the span of a month and a half, give or take, and right now we're sort of at bear market lows in terms of momentum, in terms of like washout, in terms of sentiment, in terms of selling pressure, all of that stuff. Yet the price hasn't really collapsed. I mean, yeah, it's down 30% off the highs, but back when it was doing it, back when these signals happened, it was already down, 60, 70, 80% off the highs by the time we hit these sort of exhausted seller type levels. And so this is interesting to me. It's interesting to me that we're already at these levels, we're already so oversold, yet the price didn't fully collapse. And I think that that's actually bullish. I think that that's a sign that like this is less of a long-term extended bear market and more something that looks like a mid-cycle type correction. And so the other thing is we're holding right here at the 100-week moving average, and you can see ultimately when this signal triggered back here, we were way below the 100-week moving average. Same thing back here, way below the 100-week moving average, and then not here, but ultimately here also. So I think that this is more a signal of again, seller exhaustion, and I think that carries more weight than the structural damage that has occurred on the chart. Like we know we've had breakdowns, we know it's broken down below the 50-week moving average and the 200-day moving average, and everybody's talking about structurally we're in a bear market. And like technically, yes, that is true, but I think there's some nuance here that we need to sort of pay attention to. And this is telling me that the fact that it's holding, like again, if we kind of zoom in here, let me zoom in. So in this chart, the 100-week moving average is this yellow line, and we're holding support here. And this is telling me that it's holding here, and we're so exhausted here that essentially there's not a whole lot more sellers to sell. I mean, yeah, we've got those big OG whales out there, but like I think we're seeing a lot of the selling that's already going to sell. And to me, it's looking like the proverbial beach ball held under the water, getting ready to pump. And I've got a couple other charts that sort of support what I'm seeing here that I want to talk about. So this one is one we talked about on the Monday show. And this is a chart you can pull up on CryptoQuant. It's called spot average order size. And these gray dots are sort of normal average order sized price action. When we get these green dots, that means these are big whale orders that are buying and selling on exchanges. And then when we get these red dots, these are retail sized orders. And so typically what you see is like, everyday normal price action. And then as soon as something starts to trend heavily in one direction or the other, we'll start to see whales either buying or selling. Initially they'll sell off and they're ahead of it. They're the quote smart money. And as soon as they're done selling, then we see all the retail sellers kind of basically sell the bottom, capitulate at the lows, and that happens all too often, and it's really a bummer, and I hate to see that, but this is showing exactly what happens here. And then once all the retail sellers have capitulated at the lows, then we start to see the big money come back in. Like if you go back over here and look at what happened earlier in the year, we had the big whale sell-off, we had retail capitulate at the lows, and then we had whales start buying back in and start running the price back up. And if you look here, on Monday, we just had one green dot. We've had two more green dots in a row on Tuesday and today. Ooh. So this is telling me that whales are stepping back in. We are starting to see whale-sized orders coming back in and buying back up. So again, this supports the idea that sellers are exhausted. When I go back to that last chart and show you that sellers are heavily that everything is heavily oversold and that sellers are heavily exhausted, this is also indicating that we are starting to see whales coming back in and buying and much less sort of retail capitulation happening. And then if we look here, we've been talking about liquidity a lot too over the last weeks and months, and this is, I think, a really important chart too that I want to highlight and compare to previous cycles. So if we look at these sort of mountainy looking, this chart is basically global M2 year-on-year growth. And the blue line is the actual global M2 supply, and then the yellow line is the Bitcoin price. And so let's look at kind of earlier cycles for just comparison's sake. So back in 2020 or 2015 at the lows, we saw year-on-year growth of M2 just really bottom out. I mean, it went below the even threshold, went into the negatives, and you could see it on the aggregate too. You could see a huge decline in aggregate M2 that sort of coincided with Bitcoin losing value. And then at the same thing in 2017, 2018. Now, granted, it didn't fully nuke out like it did back here, but it did technically go into the red. It did poke into the red ever so slightly, and we saw also a rollover in M2 in the blue line here at the same time. And then same thing in 2021. Same thing. We had the peak. We had global M2 peak. We had the year-on-year actually peak way earlier, back in the early stages of February in 2021, and it just nuked and went through the floor. Year-on-year went way red again, way into the negatives as M2 rolled over into this sort of year-long bear market phase that we experienced at that point. Now look at what's going on right now today. This doesn't look anything like either of those previous times. Like the market has peaked already. It peaked back here in November, I'm sorry. And yet we've ripped year-on-year year-on-year global M2 has actually ripped since then and is going up. And we've actually set a new all-time high in aggregate M2, even though Bitcoin price is going down. But if you look, we're not anywhere close to like the year-on-year peaking here or here. And we're not anywhere close to it bottoming out. If anything, we're actually setting we're in an uptrend in terms of year-on-year global M2, and clearly we're in an uptrend in aggregate global M2. So this is telling me liquidity is not only not slowing down, it's actually speeding up. The liquidity conditions are speeding up right now. So if you look at this, and then you look at the fact that sellers are exhausted, which we touched on, if you look at the fact that whales are stepping in to buy at the lows here, I'm not seeing the cycle being over. I don't know about you. I don't know about you, but I'm not seeing the cycle being over. I'm seeing like a strange sort of anomaly that happened off the back of like the October 10th events and market makers kind of taking a step back, and we're in a bit of a low liquidity environment with crypto specifically, but like this is telling me that sellers are very exhausted. There's way more buying pressure than there is selling pressure based on what I'm seeing right now, because again, we know this is telling us again that sellers are exhausted, and this here, where's my chart? This here is telling us that whales are stepping back in to buy. So I can't help but be optimistic right now when I look at this information. Again, I don't know about you, but this looks good to me. So go ahead, Nico. Sorry.
Oh no, I was just going to say, after listening to all of that, of course, how could I not be bullish still? I was going to joke with you that so we're in a bear market, but obviously not. Especially that last chart you showed us with the M2.
Right.
And everything.
Right.
So,
yeah.
Really, really great stuff.
So and then that leads us to, well, what about the price action right now? Price action is garbage. Everything looks like looks terrible. Everything's going down. Everything's chopping sideways. We know there's very little liquidity on the exchanges. If you kind of watched the show on Monday, I went through that explanation a bit. And so right now, again, we're just in this very choppy, very sideways, very illiquid crypto environment. And I think it's going to be that way for a month, maybe 2 months. I'm not expecting a big Santa rally. I even acknowledge the idea that we could see a bit of a, cheeky wick down to the, mid 70s or something like that, and, a bounce out of there. I think any major dip is going to get bought. Clearly, that's the case based on what we're seeing from whale buying. And so, yeah, I would say, if you're trying to sort of be active and trade this, it's a very, very risky environment for trading right now. The trade right now is to do nothing, honestly, because it's very illiquid. We've seen a lot of those, quote, Bart Simpson candles that are being shared on Twitter everywhere. It's just market makers going up and straight down, and and that's really what's happening right now. And so trying to play that is essentially, pulling the handle on a slot machine. And so there's no edge you can glean from what's going on. And I really feel like the thing to do right now is to just kind of sit back and wait and enjoy the holidays, and come back in January and wait for something to happen. Wait for the liquidity fountain, faucet, whatever, to really be turned on in earnest. Like, we know that things are happening. We know that liquidity is coming in, but it needs serious momentum, and maybe even a bit of a sentiment catalyst or something to juice the markets in a positive direction to really kind of kick on. And the fact that the market is so illiquid right now, any kind of sentiment catalyst that we get is actually going to result in a much bigger spike than maybe it otherwise would, because the order books are so thin. It's going to take less money to move that needle, and we are going to see, prices are going to spike in both directions. But in the case of a positive catalyst, of course, that means a spike upside. So yeah, I mean, I feel like don't read too much into it right now. Don't look at every little candle and wonder who's dumping or who's buying or who's doing what. Like, it's just noise. It doesn't really matter. Everything is, I think, really fine when you zoom out and look at what's actually going on. And so that's where I'm at.
I love that, man. Very positive news heading into the holidays. I also love, step away from the charts for like a couple weeks. Not the end of the world at all. Obviously, if something big goes on, you will be alerted.
Right.
Step away. Touch some grass. I'll do my end of the year TV, film, book recommendation on Friday at the end of weekly wrap up. So maybe some ideas you can find there. But Kris, after that amazing nearly 20-minute monologue, basically, you just pulled a Raoul and a Julian, that was awesome to watch. YouTube, we got a question from YouTube. Eli Baraki John 7463, and you're gonna love this one because of your t-shirt, man. What about SPX?
What I'll say about SPX real quick is what I keep coming back to with that, is the holders. And I think that this says it more than anything. And so I go back and I look at holder scan, and I look at holders over 1,000, holders over 10,000, and holders over 100,000. And SPX leads the charge in all of those. SPX is the top of the stack in holders over 1,000, over 10,000, and over 100,000. And that's actually big, because these are big. It's being compared to a lot of big memes out there. We're talking the likes of, Whiff and Bonk and Trump and Fartcoin and Pengu and Pepe and all of that stuff. And SPX is at the top of the pack, and it remains at the top of the pack. So this is telling me that, like, there's people here that are heavily invested in this, that have skin in the game. And I think the one that's really the most important is the $10,000 level, because that's a lot of money for like a new retail investor who's going to come in, maybe is new to crypto and who's going to invest in a meme coin. To put $10,000 in that, again, that's a lot of money for a lot of people. And for SPX to have almost twice as much as just about every other meme out there at that $10,000 wallet level says a lot about just, again, people who are invested in the long-term outcome of this meme. So I don't need to look at the chart Like the chart doesn't matter, as we know with SPX. To me, what matters is the conviction of the community, and this wallet metric here tells me everything that I need to know with that.
I love that. That's fascinating. I actually had never seen this website before. I feel like an idiot. Can we actually just take a look for just while we're here, rekt? Obviously not expecting it to be this high up, as it's definitely more niche at the moment still, but just curious what their holders look like.
Yeah, it's funny. I thought I had it on here, actually. I'm surprised I don't. Yes, so let's look. They're primarily on base, but it looks like they've got ETH2. So yeah, the total, so combined total, they've got 600 and about 615, 16, something like that. Holders over 10,000. Compared to SPX, we've got 28, about 3,000, a little over 3,000. So, yeah,
that's interesting.
The one that stands out to me the most is Pepe, because Pepe has like a really high market cap. Pepe is basically kind of right under the likes of Shiba and Dogecoin, you know, as like big sort of OG memes. It only has 31 holders over 10,000. Again, compared to like over 3,000 in SPX.
Yeah.
So
I wonder if one of those holders in Pepe is still Mando and OSF. Could very well be. They're one of those 31s. We got another question. It's from Cryptricity. Great username. Kris, what's your take on Zora and Aerodrome Finance, the concept and the coin?
I'm not familiar with Zora.
I'm not either.
But let's look at it. I feel like I should be. Well, I guess I can't, as far as the concept, I can't speak to it because honestly, I don't know. I don't know what it is. The chart looks okay though. The chart is essentially holding up pretty well. Like it's off of its highs, but it has a couple of DMARC 13s. You know, a 13, 9, 13. Actually, a 9, 13, 9, 13, and it's held up well. It hasn't like bottomed out, and it's slowly reversed. I see structurally it looks pretty good. But again, I can't speak to it fundamentally. I don't know what it is. As far as Aerodrome, though, I'm very familiar with that, and I am bullish on that from a fundamental standpoint. Let's look at its technicals here real quick. Technicals look a bit ugly at the moment. It's in the process of completing a DMARC 9. It's at an 8 right now. It's definitely trending down and not holding up as well as others. But I like Aerodrome because of its Coinbase tie-in, because it's sort of the de facto decentralized back end for Coinbase trading, for DeFi trading on Coinbase. It's all going through Aerodrome, and also they have mechanisms in place to accrue value back to its token holders. So that's another solid checkbox that you want to have ticked for an altcoin, basically. So yeah, it's a bit ugly at the moment, but I think that this one ultimately is going to have longer term staying power. And it's just a matter of time, I think, before this one reverses. So I'm not going to say in terms of when to get in or when to get out, but I think, again, just fundamentally, this one is one of those that I would put in the category of an alt that's doing all the right things, so to speak. It's got major tie-ins. It's a legit business that's generating revenue. It's giving that revenue back to the token holders. Of course, it's got a tie-in with one of the biggest exchanges on the planet. So I don't really see it going anywhere anytime soon. Yeah.
Interesting. I'll have to take a look closer at Zora as well. I'm not familiar with that coin either. Anything else you wanted to take a look at before we wrap out the year, actually?
Honestly, no. I think I can, and the reason I say that is because I kind of come back to really price action is just noise right now. Like, I feel like we've been saying for quite some time that you should be in the positions that you're going to be in because you have high conviction in these positions and not because you are, just sort of saw a tweet somewhere and thought, I'll buy some of that, like you need whatever you're in crypto right now. And I think this is going to be the same. This can be said for crypto going forward, is the days of easy money where you just throw a bunch of money in a bank account and you sort of fumble backwards into sort of huge wealth, those days are gone. Like it's the difficulty factor has rapidly increased over the last year, and I think that you need to do the work, you need to do the research, and the stuff that you are in needs to be because you have an advantage, know something that we don't, and have real solid conviction as to why you think that asset is going to increase over the coming months and years. Just like you would stocks. Like people don't just buy stock. Well, typically people don't just buy stocks because of like they're chasing the price. They look at the company, they look at the fundamentals of the company, they look at the company's competition, and within that business sector, there's like all the stuff going on that you need to understand with stocks. And I think that really is starting to apply with crypto. I think the days of chasing hype and speculation are waning. Of course, there will always be exceptions to that rule in both instances, but the days are waning of hype and speculation, and I think we're seeing a shift back to real fundamentals. The altcoins that are doing the best are the altcoins that are making a lot of money right now in real world revenues and are passing some of that money back to token holders and are using it to grow their businesses and things like that. And so that's why you should be holding something. And if you are holding something for those reasons, then you don't need to worry about the price action right now, because it's just noise while we're in this goofy, illiquid crypto environment, and we're going to see price action that isn't really reflective of the underlying fundamentals. And so that's why I say I don't have another chart to look at. Just step away and let some time pass, and I think we'll be good to go.
I think that is a perfect place to end the last Trading the Markets of 2025. We will be back January 7th, 2026 for the next episode. I think Bijan will be back. I hope so, unless he has made so much money on crypto that he bought the house of his dreams and is disappearing into retirement. But I assume he'll be back. And just a friendly reminder as well, crypto gathering tickets are on sale at realvision.com/crypto gathering. Come hang out with Kris, Bijan, and I, Brow, the whole gang will be in Miami. So come and join us. Thank you for watching, everybody. We'll see you in 2026.